right here, it has been executed. Take profit, limit, sell order failed. Acro USDT all failed. So our $50 is back for another trade, and under the trade history, this is the first buy, this is now the second buy. Right, so a little loss, of course. Like I said, we can't be able to wait. This is not less than 2 minutes, of course, before it now sold. But we can wait for 1 hour or so, and then we have a little profit. I believe you have understood the stop limit order type. Now we are going to the next one, which is the OCO. Very useful. This OCO is very useful, and we talk about the buy type before talking about the sell. Now let's see the definition of OCO and explanation which I have given on my ebook. This is OCO. One cancels the order. This is the combination of two orders placed at the same time. It is made up of limit order and stop limit order. So we have two order type combination, the limit order and then the stop limit order. You combine two of them to target a particular two prices. So whenever the one gets, it will now cancel the next one. Only one of the orders in OCO can be executed. This means that the first order which is triggered gets executed while the second cancels. I'll explain this. Know that if you cancel one of the orders, the second will also be cancelled. This aspect of trading gives you the option of placing two limit orders at the same time, which may be helpful for taking profit and also reducing possible losses. Therefore, we are going to make use of this stop loss here when we have bought either between this price or between this price. So what we do is we take up these two prices, one for stop, another one for stop limit. So we go ahead and check them out. We want to buy two prices. We are going to put one price here, which is going to be lower, and then another price here, which is going to be higher. Now look at it. I want to explain this so you understand it very well. When you are buying, the limit price, which is, like I said, the OCO order in the explanation says is the combination of what? Two orders. This one is the limit order, and this one too is the stop limit. Because when you click on the stop limit, you see that the stop limit has what? Two prices, which is the stop, the trigger price, and also the limit price. And when you look at the limit price, it has only what? The price. So the combination of this limit and the stop limit gives you, which is you combine this and this to give you what? OCO. This is what the limit, which is this, stop limit, which is this particular one. So we are combining these two. So when you are buying, the limit price is going to use for the lower price of the coin, the lower price, which is your target if the market falls lower. Then the stop limit will now be the higher part of the suggestion or prices in case if the price goes higher. So what do I mean? The price is still in between the two prices which I gave you. Now let's look at it here. This is the first price, which is lower. I'll go ahead and take this price and we put it right here, and then the next price is 0.02330. we put it right here, 0.02330 as the stop limit, and then we put 0.02330. Now look at the two prices. This is the stop price, and then this is what the limit price. So when we were explaining the stop limit, we say that when you are buying, that is necessary, or as a suggestion, that the stop price, that is why buying, the stop price is going to be a little bit lower than the limit price. Therefore, we reduce this by 1. Like I said, if you want to make use of the same prices, there's nothing wrong in that. If you want to make use of the two prices, there is nothing wrong. Or you can actually also reduce this a little by making it okay, that is a 5 with a 5 difference. Okay, so when we add 5 to this, it gives us this. Then we have 100%, that is using $50 plus to buy it. Now let me explain this. We are targeting two prices. If the market falls below this, let it buy. If the market rises to this, let it buy. That is these two prices, like I said, between these two prices. So it's either it buys at this or it buys at this. In either way, we are entering into this price. Therefore, we are not going to be left behind. But if we are using limit and we put a limit price to buy only on this, if the market doesn't fall to this particular price, which means we won't enter into this trade until we go and hit a selling target. Have you seen the usefulness of OCO order? I don't know if you got it right. Try to understand this. We said if you are using limit order and you target the smallest price, there's chances that the price won't fall below this. Let me show you on the chart. This is it. As you can see, the lowest price it has fallen to is this side, which is almost 0.02239. It hasn't gotten to the lowest price, which is this particular one, this, right? So if we are using only the limit, this limit, to set up only this price, there's chances that the market won't fall to this particular price and we won't enter into this trade. But if we are using the OCO, is 100% that we must enter into this trade. Either the price falls down or the price rises. Now let us click buy acro. Immediately it places on the chart, I will now give you more explanation. Right. It has been placed. As you can see, when you go to the open orders, we have 1 and 2. Have you seen that? 1 cancels the order. If you cancel this one will actually cancel. So I don't want to cancel it. We can actually cancel this, so you see, and place it again, so you see the difference. Okay, you see what the explanation I've given. It has been cancelled. The 2 orders cancelled. It has been cleared. You will notice that I only click on 1 and it cancelled the next one. That's why it says 1 cancels the order. So we are going to place it again and then explain. This is it. Buy acro, is here again and is on the chart also. Now look at it. Have you noticed what I said? This is 100% sure that this market is going to execute. It's either it executes when it comes down below, or it executes when it goes up. In either way, we are entering into this trade. Do you see the logic? I hope you understand this. The difference between this and this. I don't know how to explain it again, but I believe I've explained to the best of my knowledge to make you understand the difference between limit, market, the stop limit, and then the OCO, and also giving you the usefulness of the OCO, how to be able to use it to buy. Is either you buy at a lower price or you buy at a higher price above the market price. And the main purpose of this is that you must enter into this trade. Do you understand? So that's basically it. So if we scroll, if we reduce this, so we can be able to see it very clearly. Our one trade is here and another trade is here. So we wait for it. It's either it comes here and executes, or it goes up and execute. Then we place another sell order, sell it at a higher price somewhere here. Alright, well, we are going to wait for this trade, and when it executes, we look at it. We look at the particular one that got executed, and then we set up a sell order to target this particular take profit or selling targets. I will show you how you can be able to target them so you make much profit. Actually, the trade has been executed. This is like 5 minutes time or 5 to 10 minutes time, and I'm checking it again. I just checked and it has been executed. So on the trade history, let's check the one that's got executed. All right, the price of 0.02327. Okay, of course the price didn't go below, so it took the highest price. Anyways, we are still in a little profit. As you can see, the price is even above the entry price. It's going up to the take profit targets. Alright, and what we are now going to do is we are going to put up a sell order using the OCO to target our profits. I believe you have understood how to set up the different trades, the buy and sell of different orders, remaining the sell of using the selling using the OCO, which I'm going to explain now. I'll go ahead and put this on the OCO and explain it together. Remember, when we are buying, the price on the limit was lower than the stop limit prices. Now we are going to sell. Guess what is going to be the prices? Or well, what's there is that the reverse is going to be the case. The reverse of these prices is going to be the case, since where we are using the OCO, buying, the price from this side should be smaller, targeting the smaller the lowest price of your entry, and then here is targeting the highest price of your entry, which is here. Now when we want to sell, we are going to use a stop loss here, a stop loss value in case the market starts to go down, and then we take a profit either the first on the target, second or fourth. But let us look at the signal to be able to determine what we are going to use here, and also the stop loss. Now let's open the signal. This is actually the signal. Still here, we entered between these two prices, basically here. All right, then we are selling either this, which is 0.0237. Now if we are using limit, we can just decide to be taking the different first target in each signal. If you come here, you take the first target. If you come here, you take the first, like this particular one that executed within 2 hours 53 minutes. The first target has been taken. So if you prefer taking first target in any signal, that's your choice. But using this OCO, we are targeting this and then using this as a stop loss. If we come back and the price has passed this, we can now adjust this price, removing this, using this first target as a stop loss, therefore securing the profit we have made so far. Now let me go ahead and explain what I mean. We are targeting this, right? And then using this to be the stop loss. We open this. This is the highest price we are targeting. And then the stop loss we are going to target is this. Remember, we bought higher than the stop loss. So why we are using stop loss is in case the market starts going below. As you can see, this also one has a stop loss. If we scroll up, many of these used to have a stop loss in case the market starts going down. Now I'm explaining this, that using the OCO you can be able to monitor your stop loss and also take profits. So I'm going to use this particular one, and we put here to be the stop loss, and here we are going to change the prices. We are targeting this is actually the second target. Like I said, we are targeting the second target to have our profit, and also this one is going to be our stop loss. Now let me explain this. When the market goes higher to this price, 0.02420, we are going to sell at this price. But if the market goes below, like if the market starts to dump and reaches 0.01975, then we are going to sell it at this price. Remember what we suggested. If you are using a stop limit, and as you already know that this OCO comprises the limit and then the stop limit. And then the suggestion we gave in terms of using a stop limit is, while selling, that the stop price should be higher than the limit price. Therefore, we are going to add a little bit, okay, let's make this 7.9 instead of 7.5. As you can see, it's now higher than the limit price. Therefore, we use 100%. Now the idea is, if this go all the way to, or if the price of this acro rises all the way to 0.02420, then we are going to make a profit of what? This is 52.22 USDT, right? But if it now falls back, therefore we are going to have some loss, because the price we bought this is higher than this, and we are just taking a precaution in order not to lose much, to prevent further loss. That's why we are putting a stop loss. To complete this now, what we do is we click on what? Sell acro. It has been placed, and when we look at this is the first one, the limit maker. If the price rises above to this extent, we are going to sell it and take a little profit. But if the price rises below, now we are going to change this chart to 4 hours, so we can be able to see the one below is down. That is this. If the price has fallen down to this extent, therefore we sell it again also to prevent further loss. That is if the market is dumping. So what I'm going to check now, this signal says this one is the first target and this is second target. Now I will watch closely on this trade. Immediately it reaches this target, before getting to this, we can adjust this trade and removing this stop loss and replacing it with this as our stop loss. I'll show you this. I hope it doesn't get here quickly, so I can be able to show you this, how you can be able to be adjusting your stop loss by securing some profit. Now let me see if I can show you example before it gets higher. So this is where our take profit is going to be, right here, and somewhere here is our entry. Therefore, if this price rises above here, when it is here, let me just move this higher. If it is here, you are sure that you have taken a little profit from the entry to this point. Therefore, you remove the stop price, which is here, or the stop loss price, which is here, and bring it closer to this extent. Bringing it closer to this extent, which means you have secured a little profit between this and this. If the market now didn't reach your second target and now falls back, it will now execute here. Or you can equally extend this to now target a higher profit by putting either this third profit price or the fourth profit price. I hope it's clear. We are going to wait on this trade so as to give the explanation. I hope it doesn't go very quickly to the execution or the second, that's the take profit price, so you can be able to understand it practically. I have actually been checking this trade and the price has gone past the first target, which means we have made a little profit. And as you can see, what we have here is the stop loss. We are going to close this, cancel this, target the last profit, and then use the first take profit target from the signal as our stop loss, thereby securing some profit. So what do I mean? Since the target has actually passed this, which is 0.02370, and it hasn't gotten to the second target, what we are going to do is we are going to close this trade and give our target the last target. We take the last target as the highest target we are going to achieve on this trade, and then use this as our stop loss. So this is not going to be our stop loss anymore. Rather, we use this. Why? We want to secure a profit, like taking the first target in case the market falls down. But if the market goes beyond these two targets and now reaches to this side, it should sell. But you can use this as the highest target in this second setup, or you can use this depending on your timing and your availability on checking the trade. If you can be able to check the trade, you can set it up to this extent, and immediately it passes this particular second target, you extend it to the last one. But we are going to use the last one as our final target, and then use this first target as our stop loss. So what we do is we come back to Binance, cancel this. I'm going to cancel this trade. Remember, we are using this the first target as stop loss instead of this, since we have cancelled the first order. And why do we cancel the first order? Because we have witnessed that the price has passed the first target, therefore we have actually made a little profit, that is reaching the first target plus, which means the market has actually passed the first target, getting to the second target. But we can use this as our last target on the setup, or we use the, just like I have said, depending on your timing. So we have used this as a stop loss and this as our last target inside the limit box. Therefore, since we have finished setting it up, like this is the last target as our limit price, this is our stop loss, that's the first target on the signal, this is also the first target. Like I said, it's not a requirement that they should be different. You can make it to be the same, but we are going to make it to be different. And we say that while you are selling, that the stop price should be a little bit higher than the limit price. Therefore, let's add one here so that it will be higher than this. If this price, the market price, which is as you can see, is 0.02397, if it comes back instead of going up to this extent to give us more profit, then we have secured the first target, which is this. Therefore, we have to do 100% of this, and finally we go and click sell. So look at it, this is the total USDT we are going to be making if we succeed in selling at the last price. Okay, so if you look at the chart, the highest price it has gotten to so far is 0.02406. so is either it comes down or it goes up to execute at this particular price. But in either way, we are just making profit. We have made profit in this trade so far. Either it goes up or it comes down, just like I said before. So I'll go ahead and click on sell, and it will set up the two orders, which we are going to come back and see which one of them has been executed. So this is it. This is the two orders. Selling at this one, this is the highest price, and this is what the lowest price. So we're going to leave this trade as it is here and watch the market, and then come back and check which of the market or which of the orders has been executed. Lastly, our final checking of the trade. The trade has actually been executed, but this is mainly 2 to 3 days after the trade has been executed, because I had no time to finish up the video. I was very occupied, and looking at this, we want to check the particular price that was taken. So this is it. This is the last trade that was executed. That's the ACRO/USDT. As you can see, this is the sell order, the one we set up the last time, and then it took the first, that's the least price. Therefore, we have made a little profit. So it's better we made a little profit than waiting to take all the profit, and we are going to wait longer if the market falls down. And this also is very important, and I really I'm of course I'm happy to explain this now, because the market falls very massively today, right? So it would have been a loss on our own side, or we have to wait longer before we can be able to sell it again. Now look at this. This is what I mean. The market fall from this extent. This is a 4 hours chart. Okay, so the market falls from this extent to here. That's a massive fall. All right, so we have taken a profit somewhere around here, or so, somewhere around here, right? So before it now falls to this extent, though entering this market and waiting again until the market recovered is very necessary as well, like buying in when the market is deep. Let us check the profit we have made so far. Look at this. Already we are on the trade history. Before you can be able to see all the trade you have performed so far. We bought, we sold, then we bought using the OCO, and also we set up a sell target to sell it, targeting 2 prices. So it's now executed on the last price. But we are now checking the profit we have made so far. We bought using a $50 plus, and then we sold at a $51 plus. So we made a little profit of a 1 point something US dollars. Not much, but it actually executed within okay, now let's check the date. This is a 29th and then 3rd, from 29th to 3rd. So we entered with $50. So depending on the money you are trading with, if you are trading with a higher amount, then you are making more profit. But if it is trading with lesser amount, then you are making lesser profit. So let's say we have a 51.16 subtract from a 50.21, that's 50 point, that is not 50, this is 50.21. Then we have, it's not up to $1. Oh, that's 0.95. This is to show you that trading and making profit is possible when you have mastered the different orders we have covered in these lessons. Thank you very much for watching this course. If you need any question or personal assistance, or you want to ask anything from me personally, or you need a signal, you can be able to reach me. If you are watching this video from Udemy, do send a personal message on Udemy if you registered on this course, for this course on Udemy. Or if you are watching this on YouTube, do also reach me out either on Telegram or Facebook or whatever. My username should be on the comment section or my channel. So thank you very much, and I appreciate it.